You all are welcome. You all are welcome to Cryptobase Media. Welcome to Cryptobase Media. For those that are new here, if you are new here, my name is Rock. I'm a cryptocurrency trader, just like you guys here, and I am also a content creator for Cryptobase Media. If you are very used to our YouTube channel, you'd have seen me maybe once or twice discussing and talking about cryptocurrencies and teaching you about cryptocurrencies. Now, tonight, we are going to be looking at how to trade a ranging market. Yes, and then I'm going to be sharing my screen to you guys now so that it's going to be easier for you to follow me and understand everything that we are going to be talking about. Yeah, how to trade a ranging market like a pro. At the end of this class, at the end of this session, I promise you that you will understand the nook and crannies of a ranging market and you will know exactly how to make profits from a ranging market. Now, a ranging market, sometimes it is called an indecisive market, sometimes it is called a consolidating market. There are different kinds of names that is given to a ranging market. It is even called by some as a sideways moving market because actually that is how it moves. So now let's get to the first thing. Um, what is a ranging market? Now let me explain it to you. A ranging market is a kind of market that moves only sideways. It is not going up, it is not going down. It is not pumping, it is not dumping. It's just like it is sitting on the fence. If you understand the figurative meaning of sitting on the fence means you are not choosing any side. You are not choosing the bull side, you are not choosing the bear side. So it means the market is not bullish. At the same time, the market is not bearish, but the market is posing as indecisive. That means you don't know whether the market is going to pump or the market is going to dump. It is this kind of situation whereby you see that the market is just moving through the same price range. The market might just be moving from 18,500. Let's say Bitcoin now might just be moving from 18,500 to 19,500, 18,500, 19,500, 18,500, 19,500, 18,500, 19,500, and it will continue that way till it break out of those regions. So a ranging market happens when the price is moving according to a particular region. It is just moving to the right, moving sideways. Now that you understand meanwhile, let me add this. Do you know that there are two movements of a market? Number one, we have the directional movements, and number two, we have sideways movements. Now, the sideways movement is the ranging market. Now, the directional movement is also divided into two, which is the uptrend and the downtrend. Do you understand this now? So when the market is moving up, we know it is directional. If it's moving down, also it is directional. But now the market is not moving up, it's not moving down, it is moving sideways. That is a ranging market. And also, let me add that out of 100% of times, if the market is moving, the market moves sideways 70% of the time. Like according to a study, it has been like that most markets moves sideways. You're not going to be seeing an upside, you're not going to be seeing a downside. The market is just going to be moving sideways 70% of time. And the remaining 30% of time, the market is going to use that to move either up or down, which is the directional movement. Now that you've understood those kind of movements, now let us now look at how to recognize or how to identify a ranging market. All right, how to identify a ranging market. This one is also very, very important because it is what you can identify that you can trade, right? It is what you can identify that you can trade. If you can't identify it, then you can't trade it. So now I'm quickly going to take you on how you can easily know when a market is ranging or a market is not ranging. Okay, great. Let's quickly see Bitcoin, US dollar. All right, great. This is Bitcoin US dollar on a 4-hour chart. And right now I'm looking at a sideways moving Bitcoin. You can see that the market is not moving up. If Bitcoin was going to move up, it would just go this way. I was going to move down, it would just come down, just like it did the downward movement. Right here is an upward movement. I hope you all are seeing and you all are following. But right now, look at this particular part. You can see that it is moving sideways. it is not breaking out of these two guys. This coin is still here. It is still moving sideways. It is still inside this box. I told you earlier that 70% of time, most markets move sideways. Now, take a look at this again. Bitcoin did the same thing right here. It's moved sideways. It didn't go up, it didn't come down. It just moved sideways. So most times we have markets moving sideways, and it is always harder to trade. It is always harder to trade because you won't even know whether to long the market or to short the market. Do you understand this now? If it is an uptrend and then maybe the market forms a correction, you can say, okay, let me quickly enter the market and long the market at this particular point, and then I'll take my profits later because I know this market is actually pumping upwards. Now, the market is not pumping upwards, it is not pumping downwards. How do you now know whether to take a long or to take a short? I'll show you. But let me quickly see if you guys are following. If you are following, raise your hand ASAP. Raise your hand ASAP. Let me see. Let me be sure that I'm taking people along. Identifying a ranging market is not hard at all. In fact, you can easily see this with the structure. You can easily see this with the directional movements. You can see that the market is just going to the right side. The market is just going. It doesn't know where it is going. It's just sitting on the fence. It's not going up. It's not coming down. That is a ranging market. Once you see that there's a straight line, then that is a ranging market. Once you see that it is straight, that is a ranging market. It is very, very simple and easy to know. Now, you can as well see another ranging market here. You can see that it's ranged before it went further downside. You can also see this place also. It's ranged before it went downwards. So that is how to know and recognize a ranging market. Okay, let's see the next thing. Now, trading the range. How do you now actually trade this particular range? If you want to make profits and trade this range, you will have to trade those little ups and down movements. I made an example earlier that let's say Bitcoin is moving from 18,500 to the price of 19,500. Then you have to trade that particular movement. Now, okay, right now, I think this is 18,500. This is a good point. And this is 19,500. This is also a good point. So imagine you've even identified a ranging market even before this market came to this particular area. You've seen that, okay, this market looks like it is going sideways. And then you took a long on Bitcoin from this particular point around 18,500. And then you took your profits at the top here. And then later on, you short the market again. And then you continue on and on and on and on like that. That is how to easily trade a ranging market. But there is more thing that you need to know. The other thing that you need to know, this particular lines you are seeing here is called a range bound. These two lines that looks like a support and resistance line. You can also call it a support and resistance line. Of course, it is an horizontal support and resistance. So it is called range bound. Now, inside the range bound is where the price moves, and bounces. You can see that when the price touched here is bounced, touch here is bounced, touch here bounced, 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 and it goes on and on like that. So now range bound has a range high and it has a range low. Now, if you are already familiar with the chart and everything, you would have already recognized what a range low and a range high is right here. It is very, very easy to know. This particular first line, this support line, is the range low, and this particular line right here is the range high. So trading the range is as simple as buying at this point as the range low and selling at those points. Buying at this point and selling at this point. Now, I know that trading the range, the thing is actually simple, as I've been explaining it and telling you and everything. But there's one more thing that you need to know. Do you know that this particular range, it doesn't just, the market doesn't just react at that exact price. The market will just, look at this place now. I said shorting at 19,500. The market didn't actually go down at 19,500, but instead it did a fake out here. It's fake people thinking that it is actually going to break out of that range, but it is not breaking out. It is still coming back down, and it did so. Actually, I think I placed the short on Bitcoin around this part, and then I took my profits at around that same 18,500. So it was a good trade for me. because I already understand that the market is in a ranging position. Now, let me tell you guys one more secret. Let me tell you guys one more secret. Before a range like this starts happening, it is either going to happen maybe when a market just dumped. After you've seen a big dump in the market, then the market can range for a little bit before it takes the next step, before it takes the next movement. And also, if you know how to trade the range very well, of course, you can as well take the advantage. Once you see that the market has started moving to the side, to the right side, it has started moving sideways, then you can know that, okay, you draw your range high, you draw your range low. This is your range high up here, this is your range low up here. And you expect the market, you take your action at that particular level, there is no one particular price that you should use. Anywhere around this area is a good area for longing, and anywhere around this area is a good area for shorting. Now, this is one fear that happens to traders and investors when they want to trade a range bound or trade a ranging market. Normally it happens to everybody. You'll be thinking that, okay, this particular ranging market, what if I take a short here and the market actually breaks out? You feel like, what doesn't hold? You feel like, what if this particular range I doesn't hold? What if it breaks out of it? That is one particular fear. But the fact is that you don't have to fear. There is only two things that will happen. Either the market goes your way or it doesn't. And if it doesn't go your way, what is going to happen? Your stop loss is going to eat. And to me, as a trader, your stop loss eating shouldn't be something that should bother you at all, because you already know that your stop loss is, I was explaining to somebody recently that your stop loss is like your bulletproof. When you're in a war zone and then bullet hits you in the chest, once you have your bulletproof, maybe you are just going to feel that the movement of the bullet a little bit. Yes, you are not going to get killed by it. You understand it? Getting killed by liquidation means maybe the position gets liquidated, or maybe your account gets blown, or all of that. That is getting killed by the bullet. But now, if you don't want to get killed by the bullets, you have to use your stop loss, and it is reasonable to use your stop loss. So I think that is what you need to know about the range bound. Okay, let's see what is next. Okay, we've treated the range bound, we've treated the range high, we've treated the range low. Now, let's take a look at positioning yourself for breakouts. Positioning yourself for breakouts, which is also very, very important. The market won't go sideways forever. The market won't range forever. It won't go sideways forever. Sooner or later, the market is going to break out. Sooner or later, it is going to break out. And let me give you guys another example. You see, most times before the market break out, maybe break to the upside or break to the downside. Are you guys following? Most times, you're going to see that the market will start forming small candles, like these particular ones you are seeing here. That means the market is consolidating and the market is ready for a big move. The market is ready for a big move. Look at it here. This one is called a narrow range. There are also different kinds of range, you should know. That one I showed you earlier is a normal range, whereby there is space. There is space for the price to move from 18,500 to 19,500. There is space for it to move. But there are some instances whereby the range will be very, very narrow. Look at this point. Look at this point now. See how narrow that range is. It is still a range. It is still moving sideways, but it is still very, very narrow. So that is an example of a narrow range. So once you see that there is something narrow, just like a very, very narrow range, you can see that there is space now. I can't say I want to start trading the range here. It really doesn't make any sense to start trading ranges here. Only if I just want to quickly scalp. Do you understand this now? Only if I just want to quickly scalp. So if you now want to see these consolidation, these narrow ranges, if you want to see them because it happened before a breakout, you can as well set your charts to lower time frames. You can as well set your charts to lower time frames. Look at the points right here. Look at those small candles. Look at those small candles right here. I'm very sure that maybe if you see today, tomorrow, next tomorrow, you are going to see a big move from this part. Why? Because you're already having a new range. The candlesticks are already getting smaller. It is already consolidating, and something is going to happen very soon there. something is going to happen very soon. You can as well check. In fact, you can use the 15 minutes time frame to see all of these things I'm talking about. Look at it here again. Look at the big move that happened after this small range. There's no space and time here. There's no space for the markets to move up and down, up and down. You just made that particular big move downwards. So that is how it is done. Now, if you want to position yourself for a breakout of the range, this is what you're going to do. This is what you're going to do. Let's say you've taken a particular long here, and then you're expecting that, okay, this thing might actually break out, maybe due to the fact that you've seen the large orders coming in, or you've seen the large volumes coming in. What you can do, instead of saying you want to take your long here, take your short here, you can as well take your long here, and then you continue to trail your profits. If you don't know how to trail profits, there's a particular video. In fact, the video was recorded recently, I think last week. So you shouldn't scroll down too much on our YouTube channel before you find that video. So the video's title is Trailing Your Profits, how to trail your profits. Just watch that video and you can see how to trail your profits. So in case the market later pumps up, I think there is a similar example that I did. In case the market later pumps upward, it is going to be on your side. And if it is even pumping downward, you can also know that the market will later be in your side. So that is how to position yourself before that big move happens. There's a particular move I did. I can't remember where that trade is. I can't really recall right now. Okay, let me see. I think it was around here. When Bitcoin went as low as 18,700 or something. I think I took, it was here. I took that long here. Because I was very, very confident, but although I set my stop loss, no matter how confident I am, I'm always setting my stop loss. I took that particular trade here, and then I came back to take my profit here. Why? Because I've already seen this space, I've already seen this time, I've already seen the support and resistance. So I was already ready for a breakout of these smaller candles that you see here, these narrow ranges that you see here. And then when I saw these big green candles, I was satisfied. I was like, okay, very good. I am still in the right direction. And I continue to show my profits till the markets now started dumping. It's around this place. My stop loss eats with profits around this place. That is the essence of also trailing profits. So you didn't just learn how to trade the range tonight. You've also learned how to trail your profits. So let me know if you have any question on everything that we've discussed tonight. If you have any question, if there's anything that you don't really understand from what I've discussed from changing the range, just kindly raise your hand and then I'm going to give you the mic so you can speak and we hear from you.
Thank you. Yeah, Miropi, you can ask your question now.
Okay. I have two questions to ask.
Okay, shoot.
Okay. During a ranging market, how do you tend to set your stop loss so that your stop loss doesn't hit when there is a spike in that ranging market? Because most of the time, like as of 2 days ago, when I entered the BTC market, there was a spike that had to take me off, because most of the time before a market dumps or reverses, most of the times it has to take a small long so that it can take most people out of the market then before it shorts. Then my second question is, I've tried that trailing because I've watched the video, is it last week or 2 weeks he posted it. I've watched it, but when I try to make it of it on Bybit, like what's the USDT value of you can easily have before that trailing works? Because I've seen like when I must have made like $2-3 and I want to set that trailing, it doesn't work out. I don't know why.
It's supposed to be able to work. Okay, if you want to set it, I think what you should do is that normally when you place your trade, you can as well. I can still explain to you from Binance because I make use of Binance mostly than Bybit, so I still know the way Binance trading platforms works very well. But normally on Binance, when you have an open position, there's one particular place. In that particular open position, you see that stop profit and loss. Once you click on stop profit and loss, you are going to see where you can set a recent stop loss. So once you set a recent stop loss, let's say your main stop loss, you set your main stop loss, and then the market has moved upward. Now, you want to move your stop loss upward, right? Now, you can now click on that stop profit and loss again, click on now input the price at which you want to set the new stop loss, which is of course going to be in profit. Once you input it, now that's your former stop loss. You can now go and cancel it in the open orders. Do you understand? So if the market moves up again, then you now go and set a new stop loss price again, which is supposed to be in an higher profit, of course. So that is how to do it from the Binance trading platform. But I think Bybit also too should be similar to that. On Binance, it's just that stop profit and loss. It's just that stop profit and loss. Very easy to do. Now, to the second question, let me quickly answer that. Yeah, second question, you asked, how do you now set your stop loss in case of a spike? You can't avoid a spike. In a market like this, you can't avoid a spike. But this is how you can at least try to, say, predict a spike or something like that. Sometimes you can just hold on before you enter. Now, let me just quickly make an example for you with this last recent trade I just did. Let me just quickly share my screen to you that you see. Let's see. Yeah. Yes. At this particular point. No, was it this place? Yeah. Was this charts? Okay, where's the engine again? Yeah, here we are. Now, I mentioned earlier that I took a shot around this part. I took a shot on and I took my part. That range bound has been drawn since, like that's been drawn since. It's not today that I drew it. It's drawn since, and the fact is that I drew this particular range bound due to what has happened year and I feel okay. Next time when the price hits this place, then fine. I am going to enter, and at least I'm going to enter a short. Now, I didn't enter a short immediately that the price hits this particular range bound. I didn't enter it immediately. This is what I did because I noticed a kind of volume high. I noticed an unusual activity. You understand it? I noticed this great guy. What I normally do is that, let's say, for example, my round now, the range I'll set an alert, 19,500. So I did set an alert, 19,500. Once the alert hits, it didn't even take long before. So this, I was checking it on my 1 hour traffic, and I saw that. Okay, looks like my network is. Okay. Can you all hear me? If you can hear me, raise your hand. Hear me? Looks like my network was asked for a bit. Okay. Thank you. Let me continue now. So, I was why is trading view doing this to me? Okay, let me just continue. So once my trading view is not loading, let's continue explaining it for you guys. So one thing is setting your alert, set your alert at your range. In case you just see that there are something that looks like that particular range I want to break a boom, you can tell your alert and look at the next level. Even if these things are above, you can look at this resistance level and see where it's possible for coin to pass or to come back down or to bounce back. So that is what you do, and that is exactly what I noticed that after that big break, the 4-hour time frame, that's like it was faking me on the Bitcoin. After that break, what I did was that I saw small candles, through that candles that now took a shot because I saw this small candle. It's tired. Okay, great. So I think I have you guys back. So what I did was that I looked at this previous part and then I said, okay, this looks like a new resistance. This looks like where this coin wants to come back down. So I set my buy alert around 20,090. Yes, exactly 20,090. That was where I set my short alert. And then I saw the smaller candles. That was what gave me the confidence to enter a short at that particular point. Then I saw that the shorts entered and then it's continued to come back down. So for you to avoid that kind of spike like you asked earlier, just look at the price movement. Just look at the price action. Look at what is happening. You can as well look at your volume also. Look at, is the volume actually increasing? If there is a long spike or if there is a huge spike that looks like the market actually wants to break out, then you should hold on and look for a next resistance that is possible, that where that market can even say, okay, the market can reverse from there, and then you can take your shots from there, and so that you can set your stop loss somewhere higher than before. So everything still depends on your volume. Everything depends on the volume that you see earlier. So that is it. I hope I've answered your question, Miro. I hope I've answered your question properly. So Sammy, I think you also have a question, Sammy. You can unmute yourself and speak now if you have a question, Sammy.
Okay, Rob. You said earlier, I wanted to ask, say how you can position yourself.
I can't hear you. Come again.
You talked about how one can position himself, like when the market is about to make a big move, so that you can, gain from either of the, whether it's pumping or it's dumping. I was talking about, you made mention of how one can position himself when the market is about to make a big move, like from the either side, whether like when the market forms those small candles and is about to make a big move to the upside or to the downside, how you can position yourself so that you can either gain from the two sides when it makes either a pump or a dump.
Yeah, I said that, but I did say you should position yourself for the two sides. No, you have to choose one side. If you want to be, you have to be smarter than the market. It's not possible. In fact, I once tried that thing you were talking about. Like I tried to long and short the same market at the same time, feeling that okay, this market now start moving to one side, then I will cancel the other trade or something like that. But unfortunately, it looks like I shot myself in the leg. Why? Because that market was actually moving up. Then later on, the market went back down. So I lost in both sides. Honestly, it was a very tragic moment. But if you just position yourself, like I said earlier, in something like that, just make sure that let's say, for instance, the market is actually ranging or is forming those narrow, what is it called? Is forming those narrow candlesticks at around the resistance. It is possible that the market dumps from there. If it's forming it from around resistance, if it's from that narrow range, it means that there's no volume at all. But if it is now forming that narrow candlesticks, those small candlesticks, that narrow range around the range low or in the support area, then it is possible that volume enters and the market pumps up. I hope you understand this now. It is just a very simple ideology. If the market is consolidating at support, you can as well enter, hoping that volume is going to come in and then it is going to pump up. Or if it is now consolidating or you have a small candlestick at the resistance, which is the rich high, then you can as well say, okay, I think volume is finished. We should enter a short right now. Do you understand this now? One fact is that if the market wants to break out, it will just break out once. Do you get it? Most markets that break out, they won't break out from just saying they are giving you smaller candles. In fact, they'll just break out once or break down once. They won't even waste time. They won't waste time at that particular range high or range low. They'll just break out once. I hope I've answered your question that way. So it's very easy. If you want to position yourself and you see that the market is currently consolidating in the resistance, then it's possible that a short is going to happen. Do you get it? And if the market is now consolidating at a support, then it's possible that a long can happen. Now, don't get me wrong. I said it is possible. Something otherwise can happen. The market can actually do otherwise. So that is why we have our stop loss. So no one is the master of the market. You just keep learning and learning from the market. So that is how it works. But most times when it is consolidating at the range low, we expect a pump. And most times when it is consolidating at a range high, we expect a dump. So it is as easy as that. Okay, I think we are done with the questions. Thank you all for attending. Okay, great, 8:48. Thank you all for attending. If you are just joining, don't worry, this session is recorded and will be uploaded on our YouTube channel later on. So thank you all for coming. make sure you give us the kudos. Make sure you share Cryptobase Media. Tell somebody about Cryptobase Media so that they can also join us next time. In fact, I want to ask you all here that you bring somebody when you are coming next week. You bring someone, at least one person, and I'll be giving everyone the mic to speak so that I can know who you brought so that you can come with your partner. So that is it. Thank you very much for attending. See you all same time next week.